All right, can you hear me now?
Yeah. Yeah.
Okay. All right, I'm glad we're live streaming all of this. Is it working? Are they saying anything? Check the live stream. But what I was going to say when I got out here is, good morning, Bitcoins. But I didn't think it would sound like that. That was quite a start. I think we're in business now. So we'd like to welcome Vinny Lingham, former CEO of Gift and current CEO of Civic, here to the stage.
Thanks, guys. Really honored to see all my Twitter followers here. I thought you guys were all bots. I'm trying to fix that with Civic.
Actually, so much shows.
Exactly.
So, Vinny, let's get to the important questions first. How did you first hear about Bitcoin?
So I remember back in 2000, and I think probably 2009, 2010, I saw some article online about Bitcoin. And so, you know, this is how I got to my conclusion on Bitcoin back then. I read this article about this digital currency and how you have to do mining to sort of get these coins out of the system. And back then, I just gotten off like a 4-year sort of high of playing World of Warcraft. So, you know, and I actually kind of left World of Warcraft for one very important, significant reason. I got so sick and tired of these Chinese miners stealing all my gold and thorium and everything else. Like literally, they would be mining all the veins every single day, and I couldn't get any bitcoins out of the system, gold or resources out of the system. So then I kind of rage quit Warcraft back then. And then I saw this thing about Bitcoin. I'm like, oh, fuck it. These Chinese miners are going to take over this world again. I'm out. And so back then, I had an Alienware machine. It was like the worst. It was like the worst looking thing you can imagine, but it was really powerful. So if I had mined Bitcoins back then, let's just say, you know, be a different discussion. But I didn't, and I dismissed it. And like kind of like 2 years later, watching the price rise, and you know, it hit 30 bucks again. And I was like, whoa, hold on a second, something's going on here. And I started a company called Gift, and we were kind of struggling to get adoption of the product for 2 reasons. One is credit card fraud is really high. So put it this way, the margins in a gift card typically, you know, call it 7 to 10%. So when you sell a gift card for 100 bucks, you keep 10 bucks. So on a $100 transaction, the margins are pretty slim. If you get one credit card chargeback on 100 bucks, that's 10 cards, you know, literally worth a profit, or even more in some cases, down the drain. So we had to be very strict on credit cards. When you use a credit card with us, we had to double check the address. I mean, it's a crazy process, and we still had, you know, if you have 1% chargebacks, it's actually pretty high. Visa and MasterCard put you into a program, it's a problem. And when I saw Bitcoin, I'm like, hang on a second, these transactions cannot be reversed. And this is one-way payments, and this is awesome. And so we put it in there. And actually Martin was the guy over there from Gift, is one of the engineers who actually, like him and I huddled in the corner one day, because like my co-founders were thinking I'm nuts, because he had spoken to every VC in the Valley that he knows and said, we were part of this like major pivot into Bitcoin, and they were all like, what's Bitcoin? Like, I'm not even kidding, this is exact 2013 February, it was like, what's Bitcoin? But he was like convinced that it wasn't gonna fly. I had some other engineers in the company thinking it's not gonna happen. And I actually bet, I think I bet Michael a bottle of wine that, you know, one of the guys with us, and Martin's in the back there. And we said, okay, bottle of wine that we get at least $1,000 in sales on the first day. So I was like, okay, fine, let's try it out. We didn't have any other options. Everything else was kind of, was screwing up and wasn't working. So I think Martin hacked it together with BitPay in one weekend, and we actually deployed it. We had over $1,000 the first day. I can't remember the growth rate, but it was ridiculous. Eventually we were doing, you know, later that year, like $1 million a month in Bitcoin sales. I mean, there was like a day there was one day that in 2013, and actually every year, kind of Black Friday, after Thanksgiving, we were 5% plus of all the transactions on the blockchain. Just because people are spending money buying gift cards. So these was a huge success. We sold the company to First Data, Payments World, spent 18 months there, understanding, you know, the broader ecosystem around payments, and eventually left to start Civic, because I think that the biggest issue with payments isn't the payment instruments, it's the fact that identity hasn't been solved online. How do you know, like they have this notion in the payments world that it's card not present, it's actually person not present. The person's not really there, so you think that the card number is just a very weird metaphor for an account number, and it's weird that it's like a public key that you kind of give out, but anyone can take money. It's just weird, right? And so this whole credit card number thing doesn't resonate well with me. So starting Civic was the idea that we could give everyone in the world a digital ID, which you could use for your passports, driver's licenses, payments online, connect payment cards, whatever. And so it's a start of a very long journey, but the key differentiator with what we're doing now is that we're actually using the Bitcoin blockchain for starters to go in and guarantee that the identity credentials belongs to the person. And so anyway, I was thinking about leaving. Gift, I came up with this, and actually see Steve Waterhouse, my first investor in the back there from Pantera. And I was sitting with Steve at this conference in LA saying, I have this crazy idea that we can digitize, like I digitized the gift card out of people's wallets. Now, can I take the driver's license and the passport out as well? And can we allow them to use their phones to vote? And he was like, you're nuts, but here's money. So he was right about both of us, actually. He gave me money and I'm nuts. So yeah, so that's kind of where I am. 18 months later, we are launching Civic next month at Consensus in New York, and it should be a fun ride for us as we try and change the way the world looks at good identities.
So what will people be able to do with the Civic app? What would I do if I had it on my phone?
So for starters, so there's obviously, I'll give you a longer vision. For starters right now, all we're trying to do is we're trying to get people to use the product. So we're working with companies to accept it as an OAuth method. Now, if you look at technology adoption life cycles, effectively you have a situation where you have early adopters, which is everyone in this room. Then you have the early majority, which is the people who come kind of after the cool people have used it. And then you have the late majority, and then you have the laggards. The laggards you don't ever worry about, because by the time it gets to them, it's already too late. You're probably being disrupted by someone else. So we look at it as how do we target the early adopter community and get them on board. So we built the architecture in a way that's totally decentralized. There's no single point of failure. Eventually, right now there is kind of, because it's an MVP, but the idea is that all data that we verify sits on your devices. So we've done some collaboration with Intel for their chips on laptops, SGX, software cloud extension, so we can store data in a secure enclave, kind of like the way Apple does Touch ID with the fingerprint. And by doing all these things, we're trying to create the world's biggest network of identities, but Civic stores none of it. So we can't get hacked and your information can't get leaked. The only way to get anyone's information is to access their device. And literally it's a kind of the gun to the head scenario, because they have to brute force it or they have to get your fingerprints. And so when there is an attack, it's limited to either one or a few people where their phones are stolen or the devices are stolen. So you can't have a mass network attack. And that's how we've architected the system. So totally decentralized, works in any country in the world. We don't have to have servers in any country, so we don't have any privacy law issues because we're not storing data. So when we speak to government agencies and companies, they're actually they're very excited about this, because we comply with all their laws because we're not storing data, whereas the current paradigm around digital identities is creating, either it's creating blockchains where information is stored, or having kind of local server farms in each country because you have legal compliance. And so we've just taken a different perspective on it. So very much, I mean, I hate labels, but I'm kind of more libertarian leaning as a person. So I believe in sort of individuality. And when I look at what happens, I'm from Africa originally, and people don't have IDs, they can't vote. Democracy is kind of, but democracy is probably not the right word I'd use for some parts of Africa. But what happens there is not great, right? So how do you get to a point where you can decentralize that? So that's kind of the mission of what we're doing. So for now, what you'll be able to do at launch is sign up for an account. If you have an account with Civic already, that's just our ID theft product. We use that to onboard and do verification. The real product is what we launch next month, and you'll be able to log into certain, we're actually adding quite a few Bitcoin companies, crypto companies, etc. So we're focusing with this community. The idea is that if you're a crypto user and you have a Civic account, you could use it at all the crypto sites, and you wouldn't have to go through KYC and give them your passport information and your bank statements every single time. And because within the crypto community, the reuse rate is high, and people tend to be promiscuous across multiple sites, the idea is if every crypto site accepted Civic, you could basically never have to do KYC ever again, because the ID information has been validated, verified, sitting on your device, and we can confirm that. And so that's all we're focusing on right now. We're not going after any bigger, broader sites. We're just going after the crypto community.
Excellent. So what kind of Bitcoin sites could people log into? Yeah.
So we're not announcing any of that right now, I can't say, but the launch is May 23rd. So
it would be similar to the login with Facebook button, but it would be like login with Civic.
So the difference is really, so login with Facebook is, Facebook has been logged in, and therefore they will attest that you are who you say you are to the site. And there's a lot of privacy issues with that, whether you care or not. I know a lot of people don't use Facebook to sign up.
They always want to include my friends list. They're always interested about me.
Yeah.
Advertisers are great, right?
Yeah, well, that's exactly right. So, but the difference here is that we're not sharing your information. You are. It's not coming from us. It's coming from your device. So we call the protocol chain auth as opposed to OAuth, which is what Facebook uses. And we're not in the middle of the transaction either. So no one knows that that login actually occurred except you and the site, because the site's using effectively connecting with the Bitcoin blockchain to confirm the keys and let you in. So it's actually a lot more secure and a lot more private. And as we expand this, the idea is that you move from a 3-party system, which is OAuth, to a 2-party system plus a blockchain to verify it. And the blockchain doesn't know when someone reads it, right? So that's basically it.
So now I know you've written a lot of Medium articles predicting the price of Bitcoin, watching it go up and down, but now you seem to be involved in the scaling debate. What do you think about Bitcoin and scaling?
I don't get involved in the debate, I comment on the debate.
And then you get involved.
So, look, there's a couple of things I've been concerned about. Obviously, this is the scaling issue around Bitcoin. So what people need to understand is, as the price obviously rises, there's a problem, right? Because the transaction costs are rising. But that also kills demand. And I think actually Pantera put out a pretty good letter last month where they explained that their thesis around Bitcoin's price rise has really been linked to the number of transactions growing. If you look historically, as transactions rise and grow on Bitcoin, the price of Bitcoin has risen. But now you have this natural barrier number, let's call it 1,300 or 1,400, round about there, where it actually starts having a negative impact on the number of transactions coming into the network because it's expensive. So it inhibits the price from actually rising. So it's got this weird sort of negative feedback loop. And I think we'll be sitting at this 1,300, 1,500 range for a while until we have a path to scaling. And we can have the SegWit debate versus big blocks debate all night, but whichever path we take, like one of these paths will help unlock scaling, because right now the transactions, if the price rises, transactions aren't going to rise with it. So we're in a very weird spot right now. And so those are some of the, that's just like, it's a much bigger debate.
Yeah, and certainly people thought it was just a political debate, but now we've had more technical issues with something called ASIC boost, which may allow the miners to mine faster by structuring the blocks and then solving them quicker. And they might not want to give this up, and this might be the whole problem with scaling.
Yeah, I mean, that's one. I mean, look, there's a lot of arguments around this. I think that there's insufficient evidence to prove it's being used at scale, and I think it's definitely a risk. I mean, don't get me wrong. But like, a lot of people are now calling for proof of work changes. Proof of work changes is the worst thing we can do right now for Bitcoin. It's the absolute worst thing we can do. Because you think about it, there are companies, there are good companies and bad companies in the industry, but people are investing real money in securing the network. And so there are projects that I'm aware of that are trying to get funded by investors, but if there's a proof of work change, all that money will go down the toilet. So can you imagine, like Intel said, we're going to enter the market, or AMD, we're going to enter the market and start manufacturing mining equipment, okay? And then they hear about this. They're like, hold on a second. We're not going to create a fab and produce all these chips and decentralize the mining if all it takes is one guy to say, or whoever to push for a proof of work change, and all the stuff we do around building these custom chips are going to be invalidated, right? So this is the problem, like with proof of work. It's kind of a nuclear deterrent. Well, I should say, it should only be a nuclear deterrent. You shouldn't even think about using it unless it's absolutely there's no other option. So I'm against that.
If you don't want to change the proof of work, what about forking Bitcoin? Is that a good idea?
That's a bad idea as well. So I know we're stuck in a bit of a rock and a hard place here. Forking Bitcoin is the worst thing we can do as well, other than the proof of work change. Because look, think about it this way. I mean, let's use Roger for example. If Roger forked Bitcoin, and he owns Bitcoin.com and BTC.com and blockchain.com. The average person doesn't know the difference. So they go to Bitcoin.com and says, oh, this is the version of Bitcoin you should use. And then they buy coins there, and they go to Gift. And they go try and spend a Gift. And Gift says, sorry, we only accept the other version. What are you talking about? The customer support problems from this would be so bad, we'd probably take Bitcoin off the site. I'm not there anymore, but I can tell you now, just explaining to people how to use a Coinbase account was tough years ago. Okay, and so this is a real issue. And what people don't understand as well and don't appreciate is that the demand for altcoins in particular is spillover demand. The average person out there doesn't care about altcoins. This industry does, the early adopters do, the ones who have Bitcoins and Ether, and we care and we buy coins and switch from one to the other. But the reality is that the global demand for Bitcoin outpaces the demand for any one alt or any group of alts by a function of like 50 to 1. Okay, so the moment you create confusion there, it's going to have a spillover effect, and so you won't have the liquidity that you have today in crypto. So this is these are one of the issues that I have with the hard fork. So it's a tough situation.
So we should do a soft fork then. Or nothing. I've heard that nothing's a good option. Just do nothing, see what happens.
I think nothing's the likely option for at least the next 6 months.
Yeah.
I think anyone taking a hostile action either side is going to kind of wind up being a bit of a loser, I think. And so I think we're going to just sit back and status quo. But the UASF's another bad idea. There's a lot of bad ideas for you.
I'm glad
listen,
guys,
I don't have all the answers, so just I have opinions, and I've spent a lot of time researching and looking at. Like, one thing I do is I'm not a core guy, I'm not a BU guy, I'm not a whatever. I research and I look at both sides of the argument. I think actually, funny enough, Roger Ver is not actually a bad guy. He's become very emotional about Bitcoin. He's been in it for a long time. He's extremely frustrated, and his view of how things should play out is the path he's taking today. So you have a little bit of empathy for him, because he's more fatigued than any of us are, and I'm sure a lot of us are like really fatigued by this, and he's kind of just gone on a different path. And he's got some valid points, and I don't think it's like it's always like this is the evil side, and this is the good side, and Star Wars all over again, right? So this is not Star Wars, okay? There's no Darth Vader, and there's no Sith Lord, and there's no Jedi's either, unfortunately. So. But we do need to be a bit more balanced in the way we look at things, because these are not simple issues where you can say it's this or that. It's not black and white. There's actually a lot of gray.
Well, and like we've talked about on my show, it's not just about compromise, it's about unity. And we need to come together like Captain America and Iron Man and have peace. We don't need a civil war.
With a couple of bruises along the way, but yeah.
A little bit of fighting and some punching,
Until you find out I won't do any spoilers, but yeah.
No spoilers. But
in case people haven't seen it, I don't know.
Yeah, I think it's a good time to open it up to questions. Yeah. Travis has a microphone. He's going to walk around, and I'll see if we can make some more loud sounds like we did before.
Can someone give me a bottle of water, please?
All right, we got one back here. Hey, Vinny, thanks for coming out and speaking. I had a question more about Civic and kind of your product.
Sure.
So you're trying to decentralize identity, and my question is more related towards, you upload your passport, you upload your documents, or whatever. Do you guys actually verify that that person is who they say they are, or do you leave that to the company that's accessing your API to do that?
So there's two models here. One is when we do the verification. So think of it like a 4chan. We'll take the information, we'll verify it, then we'll purge it. We don't keep it on our service. If we have a partner, let's say for example we partner with a bank, whatever, Bank of America, and we're just throwing out there. and that bank says, okay, we've got 20 or 30 million customers we've verified. We want to sort of put the hashes on the platform, on your platform, onto the blockchain. We want to use your SDK to put the ID information into their existing app. And so when someone scans it using the Bank of America app, it would work. In theory, that's how it would work with Civic. So now the person receiving it would say, okay, we trust Civic and we also trust Bank of America, so we'll trust that this transaction goes through. Now, let's say, for example, that person wants to go through an airport, and the TSA said, well, do you have a form of ID? And they said Bank of America. They say, okay, cool, that's fine. We'll let you through. And you can scan that because they trust Bank of America, but they could also have settings which said, well, the source could be, I don't know, blockchain.info. No, sorry, whatever blockchain, they don't do any ID verification. So if they say that's you, we don't actually trust their verification credentials. So it'll be declined. So that's kind of how it works. It's not federated, but it's kind of federated. The federated model doesn't work because of privacy issues, but we've got a similar. Yeah, we haven't unveiled the architecture. We haven't released a white paper on it, but it's really secure, and we do it in a way that there's no trail left behind. So a lot of people use Operaturn to actually perform these identity functions. We don't, and we find a better way of doing it with more privacy. Operaturn leaves a trail. So the problem with leaving a trail, think about it this way: when you walk into a bar, and let's just say the bouncer wants to check your ID, you pull out your DMV ID, and he checks it, and he goes, "Okay, cool, that's you," and it's you in. The chance of him remembering that information, is very minimal. He's got like 100 people in the line behind you. So you feel safe using your ID there because you also know the DMV is not checking what you're doing, right? I mean, you could be driving your drunk after, but like, they're not checking it. It's a physical ID. The same thing actually needs to apply in the online world. When someone uses a digital ID in the online world, you need to feel comfortable that the person who issued the credentials is actually not tracking what you're doing with it. And that's kind of the principle of identity for us. It's just because you're able to assert identity doesn't mean you're entitled to know what the person does with it.
You mentioned that the reason that you thought a hard fork was a bad idea was because it would cause a lot of confusion to have like a parallel system to incompatible Bitcoin blockchains.
If it was successful, yes.
Right. So one of the arguments I've heard is that if there was a hard fork, it would be quickly decisive which chain was accepted by the market, and it wouldn't take more than a matter of a few days. Do you have any comments on that, and can you explain why you...
No, so that's not true, because if there is a hard fork and they have replay protection, you're going to have two coins, right? One could be BTC, and one could be BTC2. But then, for example, in the case of BU, BTC2 is running on Bitcoin.com, BTC.com, blockchain.com, for example. So now, the price of the one may be higher than the other, but some people coming in, they don't understand this stuff. I mean, like, I spend a lot of time in consumer businesses, and I think a lot of you guys don't talk to consumers as much. I'm not saying you in particular, but a lot of people in the blockchain world, they kind of sit and code all day, and they don't talk to people, right? They don't talk to customers. And they haven't, like, I literally spent Christmas of 2012 actually. 2012, we launched in September. I spent the entire day, I had Christmas lunch for like an hour and a half, answering email questions from consumers who had problems with their cards, the gift cards, etc. Like, and this is what happens in startup. Like, the CEO does all the customer support stuff. I can tell you now, it's actually a lot more scary when you realize how big the divide is between the people who know about tech and people who don't. And so, what I see already, people come to me from South Africa, all over the world, they kind of know I'm into Bitcoin, and I'm seeing people who have no business investing in crypto or buying Bitcoins asking me about whether they should be buying Bitcoin right now or buying crypto. And so this is the thing, they don't know like where to buy it, they don't know how, and these are friends of mine, and I'm like, you probably shouldn't be spending money on Bitcoin right now. And people I grew up with, went to school with, they may not even have a lot of money, but they're trying to like, is this something that I'm missing out on? Am I FOMOing by not having some crypto? And a year ago I was like, sure, buy Bitcoin, hold it, etc. Now I'm like, look, there are some issues, and I think without being well informed, it's not. I need to know. For example, look, I don't give financial advice to anyone. I don't even. When I buy altcoins, I never. You'll notice I never ever go post I bought an altcoin on Twitter. I buy altcoins. I trade altcoins, but I don't pump them. Like, I'll buy them and I'll sell them, and I'll do it privately. And the funny thing is, actually, people accuse me of like being a bear about Bitcoin. But no one accused me when I was saying, hey, Bitcoin's going up, right? It's like an echo chamber, like, oh, we're all aligned with you, Vinny, we all have Bitcoin, so keep saying that. Oh, hang on, it's going down now. No, why are you saying that? You're trying to buy cheap coins. So it's kind of funny how that works. And I wrote a post about the fact that if I buy my coins back cheaper, I'm going to pay the difference to charity. I don't care about the price. I mean, for me, it's more about what Bitcoin could do for society as an asset. So, yeah. Does that answer your question?
No, not exactly. If I could clarify or follow up, I think there's no denying it'd be confusing, but I think the argument is that like it may only be confusing for a very short period of time because of like the core chain, for instance, would not be mining blocks as quickly, and maybe miners would quickly decide that it's more in their interest to mine on one chain or the other, and it wouldn't take very long for both markets and exchanges and miners to coalesce around the least risky option in their point of view. And just go with one, even if they may not agree philosophically. I think that's sort of what I was.
But the other would still exist. The other would still exist. You can't kill the other.
Right,
but
if it only had 10% of hash power and blocks were only being mined once every other hour or something like that, I think wouldn't it
you have three chains.
Resolve in one direction?
If there's a successful hard fork, you have three chains. You have the original chain, okay, then you have the fork, and then the people running the original chain fork it again with the difficulty adjustment. Okay, so you have three chains. Does that make sense?
Three chains, but like right now we have hundreds of chains with altcoins, right? Like there might only be one chain that everyone is like gravitating towards. You don't think people would move towards one?
I think it depends on who's doing it. The confusion of the
Ethereum Classic.
Well, Ethereum Classic and Ethereum, it's a good example right now. We actually have two chains, and Ethereum Classic's now got this whole fund going. The people are starting their first ICOs in Ethereum Classic. It's a challenger to Ethereum. It's confusing. When people say to me, like, I do this on purpose, by the way, everyone says, what do you think of Ethereum? I go, which one? Because the one's trading at $4, I mean, it's not nothing, and it's got a decent sized market cap. So there are two chains.
Yeah. So obviously, I read your recent post on Medium, This is Satoshi's Choice. I might be pronouncing the name wrong. And really, you was talking about this vision about decentralization at all layers. And I was just really interested in kind of hearing more about that vision that you have for that, how you would see that even coming to being, especially as you dug into the more subtle layers of decentralization decentralization around the hardware makers and things of that nature.
Yeah. So let's start with the hardware makers, okay? So I'm less concerned with decentralization of mining in the long term, because as the price of Bitcoin rises, it's going to effectively invite entrants in. You're going to have the AMD. Look, put it this way: if Bitcoin even reached half what we think it's worth, or a quarter, let's say it's $10,000, that's a $200 billion market cap. You think Intel and AMD are not going to be able to produce chips in mass, or want to? Of course they're going to come in. And this is a big threat for the existing mining ecosystem, I think, because the big guys will come in when it gets big enough and the demand gets big enough. And so, I think mining gets decentralized over time anyway if Bitcoin's successful. So it's not a big concern for me right now. So it's funny thing is, because when you have the conversation with people around, and there are a lot of people who are pro-SegWit, call it that for now, and the argument against big blocks or a block size increase is it centralizes mining, right? My argument is it's already centralized. What are we arguing about? We already have a situation where there's two mining companies, 70 and 30% split respectively between Bitfury and Bitmain. And so why would a block size increase, centralize it further? Just bear with me on that point for a sec. But
it's not the hash rate distribution.
No, sure. But in terms of the infrastructure and mining infrastructure, there's only two producers of chips. You agree?
There's only 2 producers of GPUs.
But that's the point. Is this is the whole point. The point is that we've got centralization of production.
I don't think that's a problem. When people argue against mining centralization, they're talking about hash rate distribution.
Okay, I get it. But hang on a second. If you as an individual want to go buy a chip, right? And you say you need to buy a single miner for your house. It's not actually easily. You can't really do it easily. You have to, especially the new stuff that comes out, because there are preferred customers for those. There's not enough of an open marketplace. There are not enough people producing it. If you want to go produce chips right now, you have to get TSMC to do. It's a process. It's not easy. It's not a big enough market right now for multiple mining producers, for chip manufacturers. Or do you think it's okay having 2 manufacturers producing chips?
Yeah, that's not the problem. The problem is the physical. And
no. I'm not saying that's the only problem.
Legal distribution of the chips.
I'm not saying it's the only problem. We were saying there's the decentralization at every layer. If you look at it, should be decentralization.
Yeah, it just seemed like you were giving priority to the manufacturing thing. Like that's what people are concerned about.
I mean, look. If you have a situation where there's only two places to buy chips from, you're going to then have centralization of hash power as well, to an extent. You don't think so?
It might be an inherent problem in these chips, because I've heard that basically once you manufacture it, you need to walk it across the street and plug it right in. If you ship it somewhere, you lose almost half the value by the time it arrives.
And then the preferred customers get the new chips that come out ahead of everyone else.
Well, so they better have it be across the street from the factory, ready to plug it in.
Yeah, so I just don't think that there's enough. Again, it's about diversity across the ecosystem. It's not one. This is the problem. It's not one specific point. You can't say it's one point in the Bitcoin ecosystem that needs to be decentralized. Every point needs to be decentralized all the time. So there's no single point of failure. Imagine, for example, the current chip manufacturers in China and Georgia, whatever, something happened, some catastrophe happened in one of them. Then you only have one manufacturer of chips, right? A plant can build down. I mean, I remember back in 1990 something, some RAM factory burned down, the price of RAM went to the roof. It was insane, you couldn't afford to buy RAM. And these are the risks to the ecosystem if we have centralization of anything, really.
But what's your thinking?
Sorry.
Just very quickly, I think the point there is, yeah, it's a problem to have centralized manufacturing, but those people don't get a vote on changes to the protocol. So that the manufacturers don't vote on SegWit versus Bitcoin Unlimited. Those are the owners of those chips that were bought from those manufacturers.
Well, it's the pools at this point.
Right.
So anyone can buy the chips, but then which pool do they join? But so sometimes if you're buying chips, you're being forced to be part of a certain pool.
Right. Then that would be more.
Right. So, but if you had more competitors selling chips, and they said, look, you'll naturally have a situation where people would have free will to choose whichever pool they want, because if you don't sell the chips, then they'll buy from somebody else.
Right.
So sorry? Yeah, and now actually Moore's law is actually really good, because now new entrants can come in because the hash rate or the complexity, so the difficulty is not increasing as exponentially as it was in the past, and so the chips last longer, 16 months, 18 months, So now people can produce the chips, manufacturers come in, produce the chips, and have a longer time to recover it. And we had 3 years ago, 5, 7, 10 chip companies all in bankrupt because by the time they got the chips to market, if there was any delay in their process, they were worthless. And now it's actually not the case. Probably not the case.
And if the chips implement ASIC boost, then that might affect the way miners might vote.
Yeah, so, yeah.
Yeah, that's why my question was more so about the vision for how you can see us getting there. Because I definitely understand the vision you was presenting, but our route to get there, like under proof of work, I was curious how you saw that might happen in an ideal world.
It's just time. I mean, I think what I like about Bitcoin is it's just a total free market. I mean, it's really one of the most, to an extent, when I say free market, it's freely traded, freely available, and I think, I wrote a post on the power of the invisible hand. I think we'll see market forces effectively solve the problem for us over time. Whether it means a lower price or a higher price, who knows? I mean, I think the problem gets solved because people want to solve it ultimately.
Just a quick heads up. Free market, right? If you can have an individual run a hard fork, that's no longer a free market.
So before you answer that, for any off-mic questions, you just go ahead and repeat the question for our live stream audience, and then we'll also have a microphone going around as well. You just raise your hand if you have a question.
Sorry. Okay. Wow.
So my point was everything theoretically can be considered a free market, but you still have a lot of individual forces that can act upon this market and create disruptions. Right? A hard fork by only a select few individuals on a global scale, that's no longer a free market. Right?
Well, I would argue on that point. So if I was a billionaire right now and I said, okay, screw it, let's go build a chip manufacturing company, let's just buy up hash power by producing lots of chips, even though it lasts for a while, just to get market share in it. I could do that, right? It's a free market. I can go out there, and if I had the money to spend, I would go set it up and do it.
You could also lose your shirt when your chips go down in price.
I'm saying it didn't have to be for profit, right? So you could have a situation, for example, Bill Gates said, fuck it, we want to solve the Bitcoin problem, I'm going to go put $2 billion in and solve the problem. He can solve the problem.
Only if we consider Bitcoin a social issue more than financial.
That I agree with.
Yeah.
So I think
if we transfer that over to a different box, then yeah, maybe.
Yeah, I agree it's more of a social issue.
And the mic over here.
Sorry.
Yeah, so you talked about earlier about how at Gift you saw sort of the consumer interaction with Bitcoin and how clearly there was a lot of trouble comprehending and for people who aren't early adopters to get that space. What do you think as like a community Bitcoin and even other cryptocurrencies can do to help that, right? Do you think it's just a matter of time that more people get using it, or there's things that we can do that make it less confusing and that hopefully bring more people in?
Yeah, I don't know. I actually don't know the answer to that, and I've thought about this as well. Like, it's very. I mean, if you look at non-technical people using Bitcoin, it's actually pretty difficult for them to use. What happens is when you can obfuscate it, and so things like Abra is actually quite interesting because they kind of obfuscate the Bitcoin part of it. You can convert your currency balances. That people resonates a lot more with them, and they don't have to worry about the addresses back and forth. And so I think those sort of layers on top of Bitcoin will make it more accessible. Like I've always said, Bitcoin becomes successful when the world is using it without knowing they're using it, kind of like TCP/IP. So that's when we're truly successful. Is that imagine like we were the company that just gave everyone the world digital ID, and it's all running on the Bitcoin blockchain. That's pretty cool, right? No one even needs to know that it's being run on the Bitcoin blockchain. They'll never know.
So with Civic, you're using cryptography, obviously, to reduce your regulatory burden and overhead. You don't even have access to the information. What role do you think the nation state has to play in the long-term future of crypto finance?
It's a good question. The nation state. It's kind of like RoboCop. What's it? The prime directives. Protect the innocent, uphold the law. What's the other one? Sorry? Yeah, exactly. Deliver justice. I think that if people who are like really smart crypto enthusiasts and understand the numbers behind what they're doing are losing their money and losing their shit, that's totally fine. It's when the mom and pops get involved and it goes outside our industry, that's when I think the nation state steps in. They don't care right now. Like, if you go lose money and you go to the SEC and say, oh, I lost $1 million, and they'll laugh at you. Like, yeah, you should know better, right? But if it's a mom and pop in Texas who says, I got scammed by some guy in Silicon Valley who told me this thing was going to go through the roof, and I bought something for $50 that's worth $1, yeah, that's when they get involved. So I'm not sure how much of that's happening in the US. I know it's happening a lot in other parts of the world. People are being scammed pretty heavily. The OneCoin guys got into trouble recently. And I mean, even in South Africa, there's like Bitcoin scams going around. The scam problem is going to come in and hurt us as a community, so we have to be aware of it. But I think that it needs victims who should not have been in the game for the regulators and the states to get involved. I think it's already happening. I don't have any proof. But when it happens at more and more scale, that's when they start paying attention. When it starts hitting the front page of Wall Street Journal, how some pension fund lost all their money and the widows and orphans are crying, and that's when it gets nasty.
Thanks for a very, very insightful conversation. I've learned quite a bit. Now, I am one of the guys that give you flack about altcoins on social media.
What's your handle?
God.
Okay, I'll block you later. Thank you. See, I do forgive.
All right, so I think that the tone, the presentation of altcoins could be improved by folks who have microphones, right? There's nothing wrong with Sierra Leone, where I'm from, getting a heads up that yes, we can create our own currency, even though we'll never have a capable banking system in the next gazillion years. There's nothing wrong with having that message being sent out there. You joke a bit and said if women created a women coin, they ruled the world, right? Do you think that it would be a lot more helpful to, even if the debate is about minors, just let them know we have another option, right? Why isn't that on the negotiating table? So do you think it would be a lot more helpful to actually start presenting the opportunities for altcoins, in a better light, for those who have microphones?
So here's the problem I have with altcoins. It's that, so I'll take a step back. Has anyone here actually traded penny stocks before on the stock market? Okay. Is anyone aware of how pump and dump schemes of penny stocks work? Okay. And how easy it is to, so when you have something which is like Bitcoin with $20 billion market cap, if I try and manipulate the price with $100,000 or $500,000, even $1 million, I'm going to lose my shit. Okay, I guarantee you that it's not going to happen. The liquidity pool is just too high. With the altcoins, okay, it's just not ready for people for the average person to play in that pool, right? You can speculate for the long term, and in the crypto community, I think it's okay. Like you take the risk, you buy Ether at $1, it's at 50, that's great, or Litecoin. But people don't understand the nuances between these coins, and so the problem I have with altcoins is that even in altcoins, and I've tested this before, it's easy to manipulate. Look. I think at one stage, Bitcoin, you could crash it with a $50,000. If you knew the right technical point, okay, on Bitfinex, you could put 50 grand in, you could leverage it up 5x, and you could short it, okay, and it would trigger drops of 30%. This is back in April 2013, 14. And so it was very easy to manipulate the price of Bitcoin back then. It's not anymore. You cannot do it. It just doesn't work anymore. And so now it requires and so when the amount of money that's required to manipulate the price increases to the point where it's millions, not 50 grand, it actually becomes a lot more sensible about it. You don't, you can lose 50 grand on a bad trading day. You can't lose $1 million. Not many people can do it. Maybe some hedge funds can do it, and they still kind of try it, but it's a lot harder. With altcoins, it's just super easy. I mean, I can pick an altcoin today for you guys. Pick one in the between number 50 and 100 coin market cap, and tell me what price you want it to be at tomorrow, and I'll go manipulate it for you. I won't lose my shit on it. But I guarantee you, I can easily manipulate the price. But that's not really fair, right? So that's why when I say it's not fair for people buying it because they think it's going to go up and then it gets dumped to the top. So altcoins, because of the lack of liquidity, pose a problem to society, because this is where the regulators start coming in, because they start saying, hang on a second. You told all your friends to buy it, the price went up, you dumped your stuff, and there's no regulations around this, so you can do it, you won't get arrested per se for that. It just doesn't make it right.
So at certain level of volumes, then.
Yeah, certain volumes is not, like Ether is hard to manipulate right now. I mean, Ether's stable, Bitcoin's stable, even Litecoin to a large extent is pretty stable. But it doesn't mean a whale can't come in. So even on Ether and Litecoin, it doesn't mean someone with, like, there are some very high net worth individuals out there in the crypto world, and they can easily drop 20 million bucks in a day and manipulate the price, or buy up 20 million bucks in a day and manipulate the price. And remember, it doesn't have to be, the volume doesn't have to be present on an exchange for it to actually have the impact. Like invisible hand type forces, the market forces, if you extract volume from the periphery through OTC brokers, it actually has an impact on the exchange price. It's not visible, but it is there. So, like, I know this is some of the information I've gotten around how this stuff works with these, like, big family offices come in and do a $20 million buy. So now the OTC brokers are busy buying it up quietly on the side, etc. They're taking away latent supply out of the market, and then actually the market price adjusts. No one knows why it's going up, but it's because it's being taken out, but it's not happening on exchange.
Push back here. Hey, Vinny.
Yeah. Hey.
So, just a simple question. With the finite number of coins available, do you think Bitcoin can serve the entire planet? And if that's the case, will scaling be kind of a moot idea? Because I don't think so. If the price keeps growing, would you see this as an equity, or would you see it as a currency that could be used across the world?
So that's the other thing, the finite coins thing. The whole just give it a second. The point on a hard fork. If there were 2 coins created and built claiming Bitcoin, now you have 42 million coins. So it like just doubled. That's another issue that people have to grasp. Like it's just double the volume of coins. And so, back to your question. Bitcoin is interesting because, again, I see it as a long-term store of value, right? So a Bitcoin price can be 10,000, 100,000. There are enough sub-units that you can use within Bitcoin to make it, you can send a fraction of Bitcoin. It's fractional. So in the same way, if gold was 10,000 bucks, you can still, you can still use a piece of gold to represent 1,000 bucks, a tenth of it or whatever, to represent $1,000 of gold. So I don't think that's an issue.
But don't you think that the people who own gold are also a set of elite kind of people? Eventually, Bitcoin will be out of reach for, like people who reserve gold, will be only reachable by few, maybe who's already in the community or who already have access to capital to hold, hold Bitcoin. Eventually, it kind of phase stuff out because it's not tangible.
Have you ever bought Berkshire Hathaway shares? Have you ever owned a share of Berkshire Hathaway?
Yeah, but Berkshire Hathaway underlyingly it's an equity, but it does create value, right? It creates revenue. But Bitcoin's revenue is Bitcoin's underlying thing is its transactional, right? So
right.
If it's expensive, it's not reachable for the masses, and
I don't understand why.
There will only be a few people. I mean, same thing. Only a few people own Berkshire Hathaway.
That's not true. No. That's not true. You see, that's what. So Berkshire Hathaway's got a $150,000 share right now, $200,000 share, and then you got B shares, which everyone can buy, which is basically non-voting fractional percentages, and people buy. And a lot more people have those shares than the actual A-class shares.
This is why paper money was created on top of gold-backed currency in the first place, right?
Exactly.
You don't move the actual gold. You move the ownership of the gold.
It's a store of value. When you have the value there, then you can start figuring out how to make it more accessible. But it's not there yet.
Sorry, you can also have a marketing tool. You can change the language. It doesn't have to be Bitcoin. It can be a micro-Bitcoin, mini Bitcoin, which can be 1/100th of a Bitcoin.
We already have bits.
And has a value of 100, but it's still the same, stays the same. Right?
Exactly.
It's just a more comfortable approach where people can own Bitcoins without having to feel that they have to invest $5,000, $10,000 per one.
The most important thing is that it's stable. Like a Berkshire Hathaway share, you're not going to lose 25, 30% in a day. That's the key thing. And when you can make it stable, then you can create smaller units of that asset.
But you still think that it can serve?
Yes.
Berkshire Hathaway is only in the U.S. by the way. It's not. I mean, I don't think so. You can buy. I'm not sure, but I don't think you can buy stock from India. If you were to serve, bigger thing is if you were to serve a global population, Bitcoin becomes the equity that anybody can hold. Do you think it's there to spread around to maybe like at least 1/3 of the population?
I don't see why. So I went to a bar mitzvah in January, and I gave a good friend of mine's kid half a Bitcoin. Okay, it's like the bar mitzvah president. They said just hold it until you're 21, right? 21, funny that. So he's holding it until he's 21. He doesn't care that it was a whole Bitcoin. He's super happy that he's got like, you know, half a Bitcoin. And if it was, honestly, if it was 0.2 of Bitcoin, he'd be happy as well.
Yeah.
So I'm not sure about, you know.
Yeah.
So I don't know. Next.
So in your answer to the question over there about altcoins, it seems that the gist of what you're saying is that altcoins aren't suitable for mom and pops. There are a lot of scammers out there. There's loads of liquidity, loads of volume. But all these criticisms are pretty much exactly what the SEC said in their ruling on the initial CTA. So related to that is, right now we have like almost a $100 difference on the price of Bitcoin with Bitfinex and some of the other exchanges. And there's a token, USDT, Tether. What's your opinion on what's happening there? Do we have a situation like another Mt. Gox, or is this just something that we worked out?
So the difference with Mt. Gox and Bitfinex is Mt. Gox didn't have the coins, and so the systems. So I think Bitfinex are actually pretty good at what they do, and I think they're very trustworthy as a company from a perspective that I don't think they're illiquid. They've got the money, they've got the coins. The issue is you can't get fiat in and out of Bitfinex for whatever reason. And then Tether is trading at a discount because you can't get dollars out of Tether potentially as well. Because I think they put an announcement out this week that they don't guarantee the money. Something, I can't remember the details. But so the reason you have this spread is that people who had money stuck in Bitfinex need to get the cash out. They can't get a wire, so they buy up coins. So they can get the coins moved to another exchange. They actually wind up losing because they're selling at a discount on that exchange to get the cash back out. So the fiat banking system is putting pressure on Bitcoin. Okay, and it may be a couple of banks, it may be a network of banks, we don't know. But there is some serious pressure coming on Bitcoin for money going in and out of the system. So this liquidity problem creates the issue that you described right now. Now, if you take the perspective that, and I was against the SEC approving Bitcoin. You guys read my post, I was totally against it, I'm glad they didn't. It's because even Bitcoin itself is not ready for that prime time. It can be manipulated by, so governments can manipulate Bitcoin really easily. Like it's really easy for a treasury department to say, let's buy some Bitcoin quietly, let's pump the price up, let's dump it just so we can destroy it or whatever it is. Like this is the problem. So now we have to get to a point where Bitcoin is probably, I would say, 3 or 4 or 5 times the size it is right now to where it's actually reasonably safe from any institution, organization, entity to attack it from a financial perspective. It's not there yet. And I think getting through this fiat sort of shortage is a good thing for Bitcoin, but it might take a while. And once we, think about it. So I have conversations. I was at a big 4 accounting firms event yesterday, and they were asking me questions kind of like this. And one of the questions was around, Bitcoin as a disruptor. And everyone's got this viewpoint that Bitcoin's going to disrupt banking and this and that. Bitcoin's disrupting nothing right now, like from that perspective. Let me put it this way. Okay, what Bitcoin is actually doing is and they were more focused on blockchain than Bitcoin, but think about this for a second. If you implement Bitcoin as a technology within your company, you should be able to harness some sort of operational efficiency because you can move from a place where you require a third party for trust to a place where you don't require anyone for trust. So trustless transactions. What does that mean? So for a 500-person company that's got a payments department of 50 people or 30 people and a contracts department of 20 or 30 people, you can eliminate all those headcount right now and you can save yourself some money. So it's not disruption, it's operational efficiency. Where disruption comes in though, is when new competitors enter a market and go, shit, that company is bloated, they've got 100 people too many, they're charging too much for their products, we're going to build this thing from the ground up using Bitcoin or a blockchain, and we're going to produce a better product. And as a result of producing a better product and cheaper and requiring less people, so more automation, we're going to disrupt the industry. So what you'll find is companies will disrupt industries by leveraging blockchain and Bitcoin, but Bitcoin and blockchain itself will not be the ones disrupting the industry. Does that make sense? Mm-hmm. So when I check to companies in the space, I say to them that they need to figure out how, in a world where you can decentralize trust and you can create smart contracts and you can do all these wonderful things, how your competitors are going to attack you if they started from scratch. Or if you, as a founder or CEO, had to build this company from scratch, how many people could you eliminate in the organization and how much faster could things, like I'm an investor in Chronicle and we chatting to them about what they're doing. Chronicle basically does supply chain tracking. And the amount of, using multiple blockchains, the amount of savings that they can get out of tracking an object from point A to point B across multiple countries, where information is being shared, like in transit, etc., custody of items. The cost of that right now and the time is actually it's high. I mean, if you're talking about automotive companies, for example, where they're reassembling vehicles in different parts of the world that track all the components, they can save so much money by adopting it. So they all actually get into this game, because if one does it, the other has to do it, because if they can save 25 or 30% of logistics costs, that makes them more competitive. They can compete on prices, they can add more value to the vehicles, etc. So from the perspective of disruptive technology, it's disrupting the way maybe you think about your business and whatnot. From the payment side, that's also very interesting, because Bitcoin has disrupted payments. So it's disrupting the payments world. So money transfers, Western Union, MoneyGram, all those things. That's being, and Avera's coming in there nicely as well. That's being disrupted. So don't expect them to sit back and say, we're not going to do anything about it. Obviously, banks are going to say, look, we're losing money on wire transfers, we're losing money on these parts of our business. Now, but those guys are under attack by Bitcoin. The response is, well, we're not going to allow wire transfers to go to Bitfinex. We're not going to allow money, fiat, to go here and there. That's what's causing, so the response to a direct threat on their core business is what's going to cause this. How it plays out, I don't know. I don't think anyone knows. But I don't think that as these revenues keep dropping, and like everyone's been saying for a while, Western Union's dead, Western Union's dead. They kind of like been up there for a while, and now they're trying to use blockchain in some way. But at some point, these payment companies can't maintain these margins that they have with something like Bitcoin and even other cryptocurrencies to disperse money around the world. So there's going to be a response, and it's what banks and these companies know well is how to use lawyers and how to have compliance departments kick in. And in some cases, they're probably right. In some cases, there are reasons for preventing money laundering, and so I'm actually quite pro on prevention of bad activity, criminal activity. I think we should stamp that out. It's bad for Bitcoin. It's bad for us. We're not criminals in this room, most of us, I hope. And we don't want that. We don't want that to fester throughout our ecosystem. So where there are reasons why they should, I support that. But if it's just because, well, we don't like Bitcoin, or we think we're going to be in trouble with Bitcoin, that's what I'm worried about.
Hi.
Thanks, hi.
This is pegging off of seeing Bitcoin as a storage of value.
Mm-hmm.
How do you think the psychology of money plays in this? Because a lot of people start talking technical, but I think there's a really strong psychological component to money as it is that will prevent this maybe, or like create a lot of obstacles that people are not quite seeing. And how do you think that changes internationally? The US has its own financial system, and then obviously in other countries where they have less confidence, how would that play out?
It's interesting. I mean, I grew up in South Africa, so we witnessed high rates of inflation. I think at one point it was like 30% or something, 20-odd%. And obviously, but Zimbabwe is on our border, so we had friends in Zimbabwe, and the Zimbabwean inflation rate was pretty high. So in a world of high inflation, Bitcoin makes a ton of sense. So down 20% a day, who cares, right? In a world of low inflation and kind of a stable currency, these down 20% things are not very good. I mean, imagine running a business and you're holding your assets in Bitcoin and you have to replenish your stock or your inventory, and down 15-20%, that's your margin, and probably some of your profits gone there. So one of the problems we have today is that people are not storing, look at BitPay and all the processes, most of the money gets cashed out, so it's an in and out transaction. When you buy a gift card with Bitcoin, that gets converted to fiat. So as a merchant gift, we used to keep maybe, at times we kept like 5 or 10% maybe, but most of the time we cash out because we can't afford as a business to hold that risk, that currency risk, because if it went down 10%, we wouldn't make any money on the transaction. Now, if it got to the point where there's a stable and smooth sort of curve, and we know, look, it's never down more than 1% in a day, and it kind of rises nice and 20, 30, 40, 50% a year, whatever it is, you're more inclined as a business to say, we'll keep our profits in that, and we'll convert some of it to fiat. So if we can get to a point where 150,000 merchants, and probably only, quite frankly, 1,000 are probably relevant, were holding Bitcoin, that actually would support the price a lot more, because these transactions aren't sell transactions directly, it's people trading in Bitcoin. But we're actually a long way off from that because of the volatility and other risks associated. So it just takes time. It doesn't happen overnight. So I have a more patient view on Bitcoin than most people. Everyone wants it to double because they need it to double. People, the Twitter guys are like, it's going to go through the moon, it's going to go, guys, it's going to go where it goes when it goes, and just be patient about it. And I did say that I think Bitcoin gets to $3,000 this year, but if we can't figure out how to get past the scaling blockade right now, it's not going to go anyway, because the price rising is going to put pressure on transaction fees, which diminishes demand. I mean, BitPay, by the way, is already just, they've now stopped doing transactions less than $1 because the costs are too high. I think it's BitPay. Is that right? Anyone know from BitPay yet? No.
I do know Coinbase is charging transaction fees now. Yeah. They used to just pay for those, but now they're charging.
So you're going to see the transaction volume on the blockchain start dropping. Yeah.
On that, actually, two questions, if there's time, they're unrelated, so if people have other burning questions, I'll ask the first one. The one I'm more curious to know is what you just said, the scaling debate. What are your thoughts on Lightning? You haven't commented on Lightning. Is that a viable solution?
How much time do we have? Look, I think it's not really about the level 2 scaling solutions, what works was. The reality is, as a community, we've got to figure out what is the optimal path forward we can all agree on. Okay? Because it might be the best, but if we can't agree on it, it doesn't matter. Okay? The same with Segwit. Segwit might be fantastic, but if we can't get consensus on it, then it doesn't matter. So
you don't have an opinion in terms of if you're casting a vote.
If I was casting a vote today, what would I say? I would say we should, as a community, do one thing only, and that would be rally around increasing the block size to 2 megabytes just for now. And nothing else. No Segwit, no Lightning, just keep it plain and vanilla. Let's just give ourselves more space, more breathing room, allow the transaction values to grow. The counter arguments to that is simple. Well, I wouldn't say simple, but counter arguments. The counter argument is that, well, we have to protect the fee market because the security of the network depends on fees, and the miners make fees, and based upon what we're seeing, if Segwit happens at some point, which by the way, I don't think Segwit doesn't happen this year at all, but if it does happen, then 2 megs is too much, etc., and there won't be any fees. Now, my argument on this whole point is simple, is that if we don't think that Bitcoin will double between now and the next halving, yes, that's right. Okay? But if we think it will, and we think it'll double again, then people may have enough incentive just from the price appreciation of the coins that the fee market doesn't matter right now. And so we at least transfer that the faith is that Bitcoin itself will increase in value at a rate fast enough to incentivize miners and incentivize infrastructure investment, then there's no need to protect the fee market. So I think I'm not buying the argument that we have to protect the fee market at this point in time, which is the major argument against an increase. Now there's other technical risks of doing a hard fork, but if we get everyone to agree, 95% agree to just an upgraded 2 megabytes for now, I don't think it's the worst thing in the world. But this is my opinion, right. And we've got 25 others, and so we're stuck in the status quo and no one agreeing on anything.
This sort of defers the question, but okay.
So I have a problem digesting the statement about decentralized trust and centralized mining. In the early days of Bitcoin, the decentralized trust claim was certainly valid because you had thousands of miners, right? Today you have a number of mints that matter can fit on fingers of one hand. So the question is this: these 4 or 5 mints, they are run by what? Less than 100 people, probably. So how do you rationalize the fact that there is $20 billion capitalization, valuation of something that takes only a few million to erase out of existence? There is no parallel in other currencies. Usually there are states behind them, and they're well armed, or there are commodities like gold, whatever, and it's hard to forge. But all you have to really do to erase Bitcoin out of existence today is to convince these 100 people, one way or the other, to change the hash to ROT13, or stop doing things, and transactions stop running, and there is no Bitcoin. So how do you rationalize for yourself the fact that $20 billion valuation depends on 100 people doing something? Because you do realize if these 4 or 5 minutes stop Bitcoin is going to go to zero. Because there is no way you can replace it with something else overnight. So what is the rationalization here?
I'm sorry, which 100 people? Minus?
Yeah, there are 4 or 5 mints today that make the difference, that run the whole thing. And I assume, I'm just making a wild guess, that they are owned, operated, controlled by 100 people or less. And I cannot understand how something which is controlled by a small number of people can have valuation $20 billion.
So I think the one thing that Satoshi's white paper laid out was the network is governed by economic incentives. Okay? If you look at the entire Bitcoin network, that's it. If there is no economic incentive to progress, there will be none. Okay? And if there is, there will be. So to your point, they would have to have a very good reason and a very good economic incentive to not, to do what you're saying.
But the reason can be external, not coming from that.
It could come from an outside bank.
Oh, you mean saying from a bank?
Government. 100 people can be controlled with relatively small amounts of money and assets. That's the point.
Yeah. I'd like to know who the 100 people are, because then we can start a campaign to control them. Let's start a list, and we have a list of the 100 people, then I think we can actually make some progress in that. But I don't know who they are. Do you know who they are?
I think they're not hard to find. There are only 4 or 5 minutes. They're all in China. They have addresses.
Yeah, it's... Well, yeah, it's a tough question. I don't have an answer for you on that.
They all have like significant incentive interacting independently, so game theory kind of applies. Whereas it's really hard to convince, like 10 people to go along for a long period of time, or like 100, and then 100 that each have like potentially $1 million in the bank. And if one of them cheats, they can potentially make more money, right?
Yeah.
But it's just difficult to create solution in free markets.
Yeah, it is. I mean, but they would have to all cheat together.
Yeah, that's what I'm saying.
That's what I said.
You could buy them out.
No, I'm saying, like, I don't think it's, I agree with you. Like, this is the whole point. Like, Satoshi's white paper made it very clear. Like, this whole thing is governed by economic incentives. I don't think they have the incentive to do.
So those 100 aren't the only ones that are allowed to do this. If they were to stop supporting Bitcoin, another 100 would show up.
Yeah, again, I think that we underestimate how much is already in progress right now. So, new companies being started to produce mining equipment worldwide, decentralization of mining. It's, Bitcoin's price has risen 3x in the past year. Okay, there's a lot of funding and capital has been raised in the background, which we don't all know about, to go and produce these new chips, etc. I mean, I've heard people sending proposals. I can tell you there are guys trying to do this, and there are people who have been funded to do this. And so therefore, let's just let that play out. Let's see how it goes. I don't think we'll sit in a world where it's going to be as concentrated as it is today in 5 years' time. But maybe still in a year, but I don't think 5 years.
Yes, I'm really fascinated with Civic. I'm really fascinated with identity. I think blockchain is a perfect fit. So my question is really quite dumb. I mean, it's one about replication. What happens when, that's the $1 million question. How do you pull it back?
Well, if I told you, I'd be giving you a bit too much.
Oh, that's, yeah.
So I can't tell you how we do it, but because we don't use op return, we can do it very elegantly. Whereas everyone else uses op return.
You have to wait.
You have to wait. Well, we will release a technical white paper most likely after we launch. But we just we want to launch the product first and not give away too much of the secret sauce. But we have a way of doing it, which is really great.
So you mentioned the increase of the block size to 2. So my concern with that is the security risk. And by increasing the block size, do you think that most users of Bitcoin will go to an exchange? An example is I signed my mom up through an exchange over the phone, and it took about an hour for her to go through the process.
Sounds right.
So I just don't see many users throughout the world doing that. So I think...
Well, if they're using Civic, it would take like a minute.
Do you need to increase the block size for Civic?
But I understand what the relation is between block size and signing up for an exchange.
Well, for the time it takes to process the transactions.
So like, I'm not sure whether so the problem with the transactions, is that there's lots of free transactions that don't pay enough fees to get through, and then you have a backlog as well. And so, I don't think it's I think that there is spam that happens obviously in the network, which clogs it up, and we know. And there's argument that we don't need a block size increase, but if we had to just reduce it from free to like 0.0, like 1 Satoshi or whatever, 5, what's the dust minimum, 500 or whatever, it wouldn't cost people much to do the transactions, but it would basically effectively prohibit anyone from doing a spam attack, because you'd be losing money every single time. So, like, free transactions are probably not the best way to scale the network, because it's like spam. If everyone right now, think about your email box, okay, if every spammer was charged even 1/10 of a cent, they wouldn't spam you. Okay, as simple as that. So what's the price point in Bitcoin where it gets, where it's just enough that it's, it doesn't, you don't notice it, but it prevents spam. I don't think that number's clear to me what it is, but it's small. And we should get there first. Because like the whole notion of this being a free network is actually, the problem is that people, because it's anonymous and peer-to-peer, and people can hide behind that and cause damage. But like, I don't think anyone, I mean, if you have an argument against like even a fraction of a Bitcoin, I'd love to hear it, because I haven't found one good argument against why we shouldn't charge 500 Satoshis or 1,000 Satoshis for transactions.
Hi, Vinny.
Hi.
Who is, with Civic, who's actually, first, like, who's verifying that the documents are not counterfeit? And two, how do you verify that the person behind the screen is the same person who's depicted in the documents?
Good question. Photo recognition. So you'll take a photograph of your driver's license and you do a selfie, and we can match the two up. Or your passport as well.
So like, if I give Bank of America this photo that's stored in my Civic app, and they check it against the hash in your system, and they're like, oh, that's the same one.
No, so we've separated. So what we've done differently is we've separated authentication versus verification. So your information is verified, but to authenticate into the app, effectively decrypt the information, you have to do it at a device level. So your fingerprint, for example, doesn't get stored as a hash anyway. Well, kind of does on the Touch ID on the device, but that's it. It's device level. That doesn't get transmitted or stored anyway.
Sure, I was assuming that it was the picture of the photo ID that's hashed, and then comparing the hash. You were talking about comparing hashes.
No, hashes for the data. So on your driver's license, you've got like male, whatever, 30, height, whatever. Okay, yeah. That information is hashed. So when that gets transmitted across, it's not your photo; it's the information.
So when I authenticate into my bank account or a Bitcoin exchange, are they actually receiving a copy of the documents?
No.
No. Aren't they required to by law?
In some countries, yes.
Okay.
But in some countries, we've spoken to regulators, and they're happy to change it because it's the paradigm that they know. We had to go fax it in and they had to prove it. But if we can show cryptographically that we've proven, and we've spoken to some of the regulators in like countries like South Africa, they'll happily change it because it's a burden. And they don't really, they don't need to have a document so they've got verification. Like when we sign up, we verify your email, we verify your phone number, we send a postcard to your house, we do like a whole bunch of checks, right? And look, you're never going to get to 0%, 0% error rate, but even if it's just 0.01% of 1 in 10,000, 1 in 100,000, that's way better than today when you have fake licenses and fake documentation everywhere.
Okay, cool, thanks.
Home stretch.
I think like 2 more.
Tough customer base.
Last one. I really like Civic. And
thank you.
My question is, what do you see as the possible hurdles or threats to wide adoption of that service, and how do you overcome that?
So skepticism. That's always skepticism is one of the biggest reasons for failure with any startup, right? You come out there, it's a great product, and you think, hey everyone, this is amazing. Everyone's like, yeah, who's going to use it? Who's going to adopt it? How are you going to get traction? All this stuff that VCs ask, that's why they sit in their day jobs on the desk. But like, the way we get adoption is you're going to have a strategy for go-to-market. So we have a strategy. We're going to target the crypto community. We think that it makes sense. People want to go, we think that the needs for compliance are going to go up, and they already have gone up across exchanges. And so, yeah, I think all we can do is execute and hope that people like you guys, use it, you love it, you tell your friends. The one thing we found at Gift is like net promoter score is actually super important. When people are telling their friends about something, they really love it. And they, like, here's an example. We'll email our users and say, hey guys, if you want to see us elsewhere, go and tell them, go and tell people about us. at Gift, when we wanted to get a gift card, someone emailed us and says, hey, how do we get Starbucks on your platform? I said, why don't you ask them? And so then Starbucks gets like thousands of these people emailing, so why don't you on Gift? They don't say we want to buy it using Bitcoin. They say we want to see gift cards on Gift. And then they go, okay, sure, we'll put it on there. It's the same thing. I'd rather, and it's an old adage, but I'd rather have 1,000 like super loyal, happy customers than 1 million that don't give a shit.
So we clearly have more questions than time. We're going to do one more question, but Vinny might be sticking around for questions after.
For a bit.
All right.
So my question is, do you foresee other companies adopting this technology or having some sort of civic copycat in the future? Or do you think that you're going to be kind of a plug-in, start with the crypto community and then kind of migrate on as like a Facebook plugin?
Yeah. So think of us as like a verified Facebook Connect. So when you click on it, it's all verified, and in Facebook, anyone can create you can do civil attacks all day long. You can create 1,000 Facebook accounts. You can only have one. So you have 2 different layers. You have a civic basic account, which you can create. It's unique to a phone number and email address, or you can have a verified account, which is unique to a social security number or a national ID number. The verified accounts, it's possible to have 2. You could be in a witness protection program and have 2 social security numbers, but the chances are being very, very low. So the chance of a civil attack is very, very low. And we've got a privacy mode where you could literally log into a site or an exchange or a Bitcoin wallet, and you can log in without identifying any information about yourself. No social, no name. They get a unique token. And when you come back next time, they can ask you for more information. You can say no again, that's fine. But it allows you to try out apps. So you can think of it as like a privacy mode where you're signing up for an app, but you, like a game, and you try it out, but you don't lose your progress in the game. So you sign up with Civic, and when you log in again next time, they know it's you, and later on they can ask you to expose your email address so they can email you. But this makes it easier for people to sort of maintain state in games and anything else really. Make sense?
Yeah, I get the concept. I'm just saying, do you expect other technologies to either adopt this type of technology once you
other technologies?
Or and become competitive and have their own?
It's really hard to do. I mean, it's taken us 18 months. We filed like 6 patents around some of this stuff, and it's actually, it's difficult to do from a legal perspective as well. So, like we do ID verification and vetting, you have to connect to vendors, we've had to go through so many compliance protocols to be able to handle this data and how we process it. So I think we've got a head start. We'll definitely be competitors if we're successful, but I think it's one of those first to market type things where if the entire crypto community used us within the next 18 months, and then we start saying, okay, well, we'll go to some banks, we'll go to other providers, it's a lot more difficult for competitors to come in because then we already have a user base of whatever, X million people, and like you're going to use this new startup that has no one using it, or Civic that's been tried and tested, everyone hopefully loves it, millions use it. So it's one of those things where I really think it's a first to market, and out of all the identity players in the market, no one's focusing on the consumer, and that's kind of my background with Gift. So I just said, I'm thinking this is a consumer play first, and if it's successful, then we'll tackle the B2B stuff in a bigger way.
Yeah, and I think on the flip side too, it kind of challenges some of those other more data-driven companies, like Facebook, Google, all these others that are using single sign-on for. And I don't know if that's going to be interesting to see it played out.
Well, think about it this way. I'll leave it the last point. Like we're like the Snapchat to Facebook. Like we don't hold any information, and we don't do any data mining on any of you or anyone signs up. Like we basically don't want to touch the data. And every other company we've spoken to is like, well, they want to mine the data, know the demographics. Like we don't care. Like that's not what we do. So that's really a different approach. We'll see what works. Thanks.
All right, let's thank Vinny for coming. Everyone's ready for lightning talks. If you signed up to do a lightning talk, come on. All right, that's exciting. Microphone madness. But come on down if you want to do a lightning talk. Or have you line up over here? All right, first one right here. You get 1 minute. Travis, you got a timer? Yep. Okay, on your mark. You ready, everyone? We're going to do a couple more speeches here, and then we're going to talk. All right, give it a try.
Good day, my name is Jamari Peterson. A good way to remember my name is Jamari Go Safari. It's Ferrari. I'm representing the quantum resistant ledger. Basically, of course, the cryptographers in Canada, as well as the NSA, within the next 10 years, there's a 50% chance that quantum cryptography is going to render the current elliptical curves that are used in most blockchains vulnerable with the way that hard forks and soft forks work in the consensus. It's most likely that making sure that everything is invulnerable by the time that occurs, it isn't as likely, so therefore we're building a blockchain based on pursuing use cases that are similar to what you see now in other quantum secure communication, post-quantum secure communication as well. And we need alpha testers and people to help us build our network. Information on the QRL.org, or you can contact me, Jomari, Jomari, at theqrl.org. And I appreciate your time, and I don't know how long that was.
Perfect. All right.
Hi guys, my name is Patrick, and I'm the head of business development for Ambisafe. We are a full-service ICO provider. We work with crypto companies. We also work with a number of companies that are not in the crypto space that are looking to leverage this new capital raising facility for raising funds. We are currently looking for advisors for the companies that we are doing ICOs for. If you think that you would be a good advisor in this space, then please come find me. I would love to talk with you.
All right, thanks so much. All right.
Okay, guys, just to reiterate, Ambisafe is looking for crypto advisors. We did TAS, Chronobank, Chronicle, and Tether. So if you want to get like some percentage of new ICO projects, come talk to us. We need advisors. All right. All right.
Hey, hey. If you can hear me once, if you can hear me, clap once. If you can hear me, clap twice. Thank you. I'm Anari. I created the first ever gaming cryptocurrency, Gamerholic, quite some time ago. Right now, the product that we're launching for Gamerholic is called Grab It. This is a daily deals game. You get to win coupons and gift cards from local businesses. If you use Gift, you can use Grab It. Right now, in Oakland, there's a sex store that's offering a 25% gift card. Fillmore, on Telegraph. This is the coolest thing you'll ever win playing a game. All right, Rabbit.deals. I'm looking for anyone that's interested in having conversations with, startups doing incredibly cool stuff. Thanks.
All right, thanks so much. And all right, go ahead.
All right, now that everyone clapped twice, clap people paying attention. I do not have any sex discounts to offer, but can get you involved with some Ethereum love. There's a Bitcoin Meetup, but looking to get some Ethereum businesses started. I'm here with Consensus, and we're looking to open up a San Francisco office. So if you've heard of Ethereum, if you've heard of a token launch, and you want to see more decentralized businesses, come talk to me. We're looking for engineers, we're looking for product managers, we're looking for marketers, designers, everybody. Come talk to me.
Yeah.
Hi, my name is Hong. We are launching a venture fund over blockchain. Hi, my name is Hong. We are launching a venture fund raised over blockchain, meaning that the LP interests will be tokenized. And the fund will focus on 4 technology sectors: artificial intelligence, blockchain, fintech, mobile wireless, including IoT, and biotech. And the reason that we picked these 4 areas is because we have the track record and expertise in these 4 areas. We also believe that the blockchain and artificial intelligence will give the convergence, will create the convergence layer for businesses like IoT and biotech. So, if you are interested in talking with me about this fund, please come and find me.
Thank you. All right, thank you so much. John, are you ready?
Thank you, Tom. A lot of exciting projects here tonight. My name is John Light. I work for a company called Abra. We develop a Bitcoin wallet that lets you hold, send, and receive over 50 different currencies, including Bitcoin. You can also use the Abra wallet to buy and sell Bitcoin with a bank account today and cash using Abra tellers. If anybody here is new to Bitcoin and wants to get some Bitcoin, talk to me. I will send you some Bitcoin for free. No joke. Come talk to me. Thank you.
All right, one more talk from Steve. Go ahead.
Hey guys, my name is Steve. I'm from Korea. One of the biggest exchange in Korea called Coin1, and we trade Bitcoin, Ethereum, and Ethereum Classic. I don't know if you heard the news recently. Our volume in Ethereum in Korea is rocketing. So we're actually second biggest in terms of volume, right after US dollar. And I'm here to just say hi to begin with. Hi. We will be listing other altcoins. We will be listing Cosmos Atom and Ripple in coming months. So anyway, if you have any questions regarding the Asian market about the Bitcoin and how people are crazy about punting around with their money, come and talk to me. All right, thank you.
All right, thanks everybody for coming out. We probably ate all the pizza in the back, but you can drink all the beer too. Putting more beer out now. And ice cream, there used to be cookies. And, oh yeah, ice cream, cookies. This is a full service Bitcoin. Thank you so much.